Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource. Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VISBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VISBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VISBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Hello, good morning, everyone, and welcome to the VI's SBDC's hosting of Manager's Guide to Restaurant Financial Reports. Today, participants will learn the details of unique challenges in restaurant financial management and how to solve them to get accurate financial reports. The uniform system of accounts for restaurants will be presented along with its benefits. Let me take a brief moment to introduce today's presenter, VISBDC State Director John M. Morosco. Before returning to the Virgin Islands as the VISBDC State Director, John had many years working as a certified business advisor in Iowa, Washington State, and the Virgin Islands. In addition to the years with the SBDC, John has been a successful business owner, college professor, and nursing home administrator, and worked in corporate America for more than 35 years. He has spent most of his career working his primary job and teaching at many colleges nationwide. John has extensive experience managing restaurants, hotels, assisted living, and nursing facilities. He also assisted with his family restaurant and owned a college consulting business and a janitorial business, which he later sold. John holds a Bachelor of Science in Hotel, Restaurant, and Tourism from Florida International University and a Master of Public Administration in Long-Term Care from the University of New Haven. Here's a friendly reminder to put your questions in the chat, and they will be addressed by John immediately or later during the question and answer segment. A copy of this presentation is available upon email request to training@visbdc.org. We encourage you to take a few minutes after this training to fill out the survey and let us know how we're doing. So without further ado, State Director Morosco, the floor is yours.
Thank you all very much. It's a pleasure to be here. This topic is really a passion of mine, and especially after spending so many years in the hospitality industry with food and beverage and hotels, and owning my own restaurant, and the struggle that I watch, especially as an SBDC advisor, the clients that come in that own restaurants that struggle with their financials. It's a real journey to do this, but at the same time, it's not really hard. So I encourage you, as I'm talking today, don't let the topic overwhelm you. I am always available to take a phone call, especially from the group that's here today in training. If you have questions, put them in the chat. Don't hesitate with that. And I'm going to ask that our wonderful host and Sharika, that if something comes up, that we can stop as we're going through, if you feel something needs to be answered right away. So with that, I'm going to jump in. The session today will take about just the lecture part is about an hour. And then we're going to do question and answers. And it really just depends on which way it goes. So without further ado, I'm starting with, a lot of people have not heard about the Uniform System of Accounts for Restaurants, and I'm going to talk about that. It is the standard, as you know, and for me as a seasoned food service owner and manager and university professor in the hospitality management area, is one of the most challenging areas for any restaurant is looking at the profits and at the profit that they're making. And also, what is it going to look like as far as, what does the industry standards show? So I'm going to be sharing the first part of this is talking about the standards set up by the National Restaurant Association and some of the top financial people in our industry. So and they all follow this guide, the Uniform System of Accounts for Restaurants. And what's interesting is we're talking today, a lot of accountants have not heard about this, but you're going to become experts in the hour on what prime cost is. Now, as we're going through, again, please don't forget to, if there's something that comes up and you're not sure about something, ask the question, but you can always reach out afterwards to contact me. And so with this, and today, again, we're only going to be looking at the income statement. Okay, there are many other reports that we can look at, but today's session is mainly the income statement because there's also the balance sheet and there's the cash flow statement. And I'm most likely going to do another session on cash flow, because how many of us have heard someone go, oh, my income statement, it says that I made money, but I can't pay my bills. Well, that's because a lot of people don't understand how to look at the cash flow, but that's for another session. So what we're looking at today is the discussion about the Uniform System of Accounts for Restaurants, USAR, a review of the income statement that is set up through the Uniform System of Accounts, and discuss of prime costs. A lot of people don't understand prime costs, and I'm making some assumptions. If anybody wants to put in the chat, if they are expert at this, I may call on you to help me with some of this. No, I'm just kidding. So, and then the last part of what I'm doing today is I'm going to pull it all together and looking at the revenue, prime cost, controllable and non-controllable expenses. And again, some of these terms may be new to you. Don't let it scare you. This is what the training is for. This is the journey that we're taking, so you can see how the professionals in our industry are looking at financials. And I'll mention it a little bit, as an associate professor in hospitality here at the University of the Virgin Islands. Everything that we're talking about was part of what I taught in the food, beverage, and labor cost control class at the university in that curriculum. So this format that we're following is known nationwide. So just a couple of fun statistics that, right now most of these are 2023, 2024. I'm waiting for some of the updated information that I can get my hands on. But right now, in 2023, there were 749,404 restaurants in the United States. And the restaurant industry employed about 15.5 million employees. 9 out of 10 restaurants in the United States have fewer than 50 employees. And 7 out of 10 are single unit operators, the small businesses that we're so familiar with. This is a fact that if any of you are restaurant owners are going into the business, 94% of diners research a restaurant review online before going out to eat. That is just the new standard. It's like when a cruise ship comes up to our ports here in St. Thomas, the one thing I have always said is be ready if you have a restaurant, if you have a store, because what are those cruise line passengers? The first thing they're going to do as soon as they can get internet is they're going to Google. They're going to find out what's going on. So that's an important thing for your business. The US, and then the sales was in the industry 898 billion in 2022. I'm waiting for 2023 information to come in. Now, some of you may have, right now, my favorite topic is, and it's for a whole nother session, is that there's 8,105 ghost kitchens in the US. And a ghost kitchen, it's the space where the operator goes in, they actually, it's off premise, they cook their items, and it's like Grubhub, DoorDash, and the listing in the restaurants, and then they actually send the food out. There's no brick or mortar, and it's really a very popular trend right now. For example, where in northern Colorado, where I used to live, there's a restaurant called Rocco's Ravioli, and it appears on the app, but they don't have a location. There's no storefront. And so that's what we consider a ghost kitchen. They're producing everything in this space and then shipping it out to the people. The other very interesting thing that I look at is the average. 51,863 is the average debt for a full service operators carried in 2023. 58% of the restaurants stated in the survey from the restaurant report that their biggest concern, financial strain, is looking at controlling inventory. So those are things that we may look at today. Okay, so for our discussion today, the Uniform System of Accounts is it's known as USAR. And again, today, we're only going through the income statement review. The others we'd have to have 4 or 5 sessions to do that. The goal of the session is to share the essentials and unique reporting techniques as an industry standard in the income statement using the Uniform System of Accounts. So just for reference to understand how huge the Uniform System of Accounts, there are 4 different types of Uniform System of Accounts throughout the hospitality industry. The American Hotel and Motel, that's showing my age. It used to be the American Hotel and Motel Association. It's now the American Hotel and Lodging Association. They're in their 12th edition, and this is the oldest system for reporting and setting up accounting standards. I cut my teeth in the industry back in the early 70s on this Uniform System of Accounts. Again, you'll understand it a little bit more, but it's how we report everything as an industry to make sure, and then it makes sense. The next one is the one we're talking about today, the National Restaurant Association. I get the kick out of the NRA. The Uniform System of Accounts, they're in their 8th edition. The Club Managers Association, they have the Uniform System of Financial Reporting for clubs. They're in their 7th edition. And the International Spa Association they're the newest ones. They're in their 1st edition. It's the Uniform System of Financial Reporting for spas. So again, every one of these industries, it's how are we going to report our numbers? What is the standard that we're following? And this is a little bit of what you're going to get to see today with the restaurant and the income statement. And the Uniform System of Accounts is meant to be straightforward and non-technical guide to standardize restaurant accounting, financial controls, record keeping, and relevant tax matters. And honestly, everybody, if I can do it, anybody in our group here can do this. The Uniform System of Accounts is geared primarily towards single unit or small unit independent restaurant operators. And really, and what we're looking for is, and for those of you that need a way to maximize useful and value of their restaurant and increase that. Now, I will say at this point too, the Uniform System of Accounts is not mandatory. However, in the many years that I've been in the industry, my opinion is that most small business restaurant owners have little understanding of the financial performance and what they are spending. An example, a recent restaurant, and I moved here in August from Iowa. It was, again, they were opening, had been opened, and they had absolutely no clue as to how they were doing financially. The first question, they said, "We're in trouble. Can you help us?" I went in and I said, "Well, what do some of your financials look like?" They had nothing. And so many of the restaurants around the industry, and it's just rampant across the all 50 states and territories. So the idea here is that you start to get an idea of the reporting that you can do. So given the complex nature, now these are two scholarly articles. They were about 40 pages each. But just two of the quotes that I like here is, given the complex nature of restaurant operations, managers should learn accounting and management skills, and implementing the USAR may facilitate measuring a company's financial and non-financial performance using, for an example, the appropriate accounting systems. That's the whole point of what the uniform system of accounts for restaurants is doing. But more than that, it's that you, or the restaurant operator, I'm assuming that everybody here has some form of, they're tied into a restaurant, but really that you start looking at your financials, because without that, and when I go through some of these statistics, it will make sense on why so many restaurants in the country do shut down. So this is from the restaurant owners. The Uniform System of Account helps restaurant owners to restructure their financial statements in a manner that help make industry comparisons more meaningful. It's also a structure in which the industry standards are measured. So the restaurant industry, the food service industry, most of what we do are measured on these standards. It's uniform. The Uniform System of Accounts for restaurants is pretty much the guide for most food service operators throughout the country. And the Uniform System of Accounts is also designed to assist restaurant bookkeepers and accountants to navigate the industry myriad that's often unique and varied with the accounting issues. I cannot tell you how many accountants go, "We don't know anything about this." And I sit there and I have to train accountants on what this is. And it's absolutely legitimate. And so as we're doing this, and they go on to say, this includes discounts. How do you handle discounts? Comps, server banks, paid outs, gift certificates, breakage, service charges, and so much more. Just so some of you know, breakage, you may not have heard that term. I actually I had forgotten, so I had to go look it up about a year or two ago. But if somebody comes in and gets a gift certificate, they buy it, they purchase a gift certificate, but they never use it. That's what they call breakage. The question is, again, legally, unless it's, how did you write that gift certificate? Did it have an expiration date? If it doesn't, you should talk to your attorney to make sure that you're not on the hook and have to carry that fund. Let's say someone put in $100 on a gift certificate. Do you need to keep that $100 available for the rest of the time that you have the restaurant? Again, we can get into that more, but just be careful with those. So we're almost with the case study, and this is from Campos, Santos, and Gomes. And really, I think this sums up the case study. The Uniform System of Accounts provides the best operational and financial information preparation for restaurants to succeed. That's the key word, everybody, succeeding. The implementation of the Uniform System of Accounts presents advantages such as proactive control on your cash and your revenue control, your food and beverage costs, your labor costs. And one of the big topics we're going to talk about is the prime cost. The cost of goods sold plus your labor is what is known as the prime cost. And with the uniform system of accounts, it has the uniformity and it allows benchmarking throughout the entire industry. So here's why we do this, everyone. And again, please ask questions as we go along. Why are we implementing the uniform system of accounts? The reason is right here. The industry standards. The average restaurant makes only about 5% profit after all expenses have been accounted for. So when you think about it's 5%, that means for every dollar you take in, the average restaurant in the United States is making 5 cents on every dollar. So it's crucial that the owner knows where did that other 95% go and how do you look and make sure you can improve your profits. It would be nice to say, oh, we got that up to 8 or 9%, but it's tough to do in this industry. It really is with the costs that are involved with everything we're doing. So you as restaurateurs or food service people have really got to understand that, we're busy, we're getting food out the door, somebody didn't come in. The shipment is, the delivery is late. All of these things come into play. I know, I've been there. And you just want to tear your hair out, but you cannot, you're not doing yourself justice if you are not following what is happening financially in my business. So the uniform system of accounts, this is going to assist, and it usually does assist restaurant owners in restructuring financial statements in a manner that help make industry comparisons more universal and more meaningful. And it gives you the structure that here's how we're measuring all these standards, restaurant to restaurant, food service to food service throughout the entire country. So we're looking at things like, because the restaurant faces distinct operational challenges, which most of us know, we're doing things in the food service industry that are unique to the accounting system and the discipline. And a lot of accountants, as I said, don't understand that. So typically accounting methods that are normally used, if you took your business to an accountant, a lot of times they're not going to understand this, and it takes them to really dig in to understand this. So the regular way of doing a financial report out is, that, let's say somebody in the clothing industry is using, does not match what we need to do in the restaurant industry. And the modern restaurant accounting method depend on accurate and timely records. And tracking and measuring everything in the metrics is so important when you're a restaurant owner. It will help you understand the business trends, stay competitive, and enable you to act strategically on your future projections. So prime cost, I jumped in. Now we're really going in for the meat and potatoes of this whole thing. No pun intended that we're food service people. So the prime cost is something that we look at, and you'll see this in just a second. I'll get to that. But what we're looking at is, again, we're looking at the income statement. There are other reports, but the cost area, what we're looking at is cost of goods sold. So your food and beverage cost of goods sold, and your labor consisting of salaries and employee benefits. That is what we consider the prime cost. Why? Because it is the most expensive part of any restaurant. And I highlighted, cost of sales and labor, when combined, is referred to as, again, the restaurant's prime cost. The prime cost typically consumes 60 to 65% of everyday sales dollars. So to translate that, that means for every dollar you take in, 60 to 65 cents is going out just to cover food cost, and it's going to cover labor. That is just standard throughout our industry. So it really behooves you to understand what's going on in your business and to understand what these costs are doing. I almost bankrupted my first restaurant because I didn't know, I wasn't watching my labor cost. And just, truth be told, I was shocked when I'm going, holy mackerel, I can't make payroll. Because I kept putting on people, oh yes, customer service is so important, but I wasn't watching. I wasn't looking at that that's a prime example of not watching what's going on in your operation. I soon got that under control and everything turned out fine. So, so really what we're looking at is cost of goods sold. So this is key performance indicator number 1. A lot of you may have heard it, but I'm just doing a review. So the prime cost is the sum of the restaurant's food, beverage, and labor costs. And some restaurant owners will consider their profitability cost benchmark in the numbers on the P&L. So as you're putting these numbers together, the cost of goods sold, how do we put them together? The first thing that any restaurateur, any food service person has to do is look at what is the cost of my food? And there is a standard formula. Some of you may know this, some of you don't. If I'm going too fast for somebody and you want to check in with me after the presentation, feel free. I'm pretty good at helping coach people through this. So you have the equation is beginning inventory plus purchases minus ending inventory equals cost of goods sold. Why do I need that? Because when I go to compare everything, I have to know how much food was used. So the first step in the equation is determining, again, the beginning and ending inventory. The beginning inventory is the amount of product that you start with, and the ending inventory is what is left over at the end of the period. A perfect example, and I'm going to show you this on the next slide here, that beginning inventory here, it's $12,000. This is just a sample. This is, I made up these numbers. But the beginning inventory that I had was $12,000. How did I get that? Well, let's say on December 31st, I took all my inventory. I counted all the food in the fridge, on the shelves, even the food in production. You know what it's like when you're trying to count all your spices and you've only used a third or a half? You got to count it all. So beginning inventory, in this case, we're saying December 31st, was my ending inventory. January 1st, 2024, my beginning inventory was $12,000. My ending inventory from the 31st, assuming I did no more business on the 31st, that becomes my beginning inventory. That's the starting point. So it's simply the beginning inventory plus purchases. What did I purchase during that period? I'm going to assume it's 30 days. And when I finished the month on the 31st of January, I took inventory. And what I came up with is that my ending inventory was $9,000, was less $9,000. So I know between what I started with, I've added $3,000, $15,000. My ending inventory was $9,000. That means that I use $6,000 as my cost of goods sold. Okay, it's basic, and it's time consuming. There are things like perpetual inventories and all different other ways to do inventories, but I encourage you, a physical count inventory is probably one of the best things you can do until there's a better method. Because let's say you're doing a perpetual inventory, that means that, it's like you have 10 cans of tomatoes on the shelf and somebody writes that they took a certain amount out. So, but the thing is, what happens if someone doesn't write it down? There are all kinds of different things that we won't get into today. So here you go. The profit and loss form, the way a food service operator could look at these numbers. And again, I hope you can see the arrow. I had a little laser pointer and it kept getting jammed, so I'm not even going to try and use that right now. Let's see, is that not showing up? Let's see. I don't see it. I may have to go and use this. If it gets jammed up, I may have to stop the show and then come back. Okay, because this is important to see. Notice here the prime costs. Yeah, we have our sales. You have your cost of sales, food, liquor, bar. This is a really in-depth one. And then the next area, so your total cost of sales, and then you have your labor. These two together are when we get our sales less the cost of sales less our labor. That is what we consider the prime cost. Why do we put it here? Because this, again, remember what I said, 65, 7, it's about average. 65 cents out of every dollar is going just to pay these. Okay, so there are a couple of little rules that I want to go through. A lot of people, and if anybody wants to, jump in and send anything in the text, again, my apologies, I can't see the text messages from where I am in the chat. I take that back. I just saw one. Okay, so what we have is on this, I lost my marker again. Okay, so why is this? Again, I apologize. I'm having trouble with the little laser pointer. It's not cooperating. So a lot of people go, oh, food cost, and they include, I have to-go containers and I have napkins and forks. The rule, number one rule is food is food. Napkins, paper towels, anything, the to-go containers, the styrofoam cups or plastic cups, those are all direct operating expense. When we talk, anytime in our industry, when you talk food, it's consumable, it's fruits, vegetables, meats, okay? Nothing to do with those other areas. Like I want to include, as I said, 5 sets of plasticware. That is going to be put into your direct operational costs. So the rule of thumb, food, and if you just, this hopefully will make sense to you. I did my inventory, beginning inventory lesson, and I did that whole formula, and I came out, the food that was used was $30,000. And again, I'm just looking at the current period. So we used $30,000. And so I'm going to take that food and I'm going to divide it into the 95,400, which is food to food. When I do that, my food cost is 38.8 cents percent. So that means that 31.8 cents of every dollar went to just to cover food. Now understand, if we added all those other things into it, the plasticware and to-go containers and all these other ancillaries that people say, oh, that's part of my cost of food. No, it's not giving you an accurate number. So in the industry, food to food, 30,000 here. Same with the liquor. Liquor being gin, vodka, whatever, the spirits is, in this case, it cost they did their beginning inventory and the whole thing. So they used $1,750. Their revenue was for liquor was $8,900. So 1,750 divided into 8,900, liquor to liquor, and the liquor cost is 19.7%. And by the way, a lot of restaurants and people that have food service operations, you can see that the cost percentage is really pretty low when you're talking about liquor. That's why liquor sales are really a good thing to have in a restaurant. Same thing with, I'm going to skip down to beer. Your beer, the cost of the beer, and then your beer sales gives us so beer to beer, in this case, wine to wine, and then we have other that I'm not going to get into. But see this bar consumables, just as the uniform system of accounts in their little book, and you can't read it. I was kidding. Yeah, nope. I'm not going to try that again. So the bar consumables, lemons, onions, cocktail onions, oranges, all those things that go in, that is considered, they will expense that under liquor, because I don't imagine many of you would really want to put cocktail onions in your beer. So that's where that gets expensed to. So everybody kind of get that? It's when I'm trying to figure, when I'm not trying to figure out, when I'm looking at and want an accurate number, I'm looking at food divided into my food revenue. Okay, liquor into the liquor category, beer expense into beer, and then we have wine into wine, and we have other that is kind of sitting out there in limbo, and I'll explain that. It's just going to be absorbed into the numbers. So as we're looking at this, the question I have is, how many of you really right now work and have a point of sale system, such as Toast or some of these others where you can, how do we get our revenue? It's real simple. In this day and age with the point of sale system, you push a button, what were my sales? And if you have it programmed right, we'll have a breakdown of every item you sold. So it's like I sold X number of sandwiches. You want to keep track of what you're selling. That's how we come up with the revenue, okay? So just think back your point of sale system, and these are the expenses. So we start breaking it down. Now I'm going to throw what I call the monkey wrench into this whole thing when we're looking at, so we looked at and we got the total cost of sales. When you add that all up, now notice the percentages are all different. Percentages really tell the story. Okay, and it's important that whenever you're doing the reports that you put them in. So overall with food and beverage total, my cost was 30 cents out of every dollar went to cover just the food and beverage. Down when we get to labor, you know how I've been saying food to food, liquor to liquor, back and forth like this. Well, now when we get down to the labor cost, this is just a variance. We get the total and we divide that into total revenue. There's nothing else to break it down except for you have the total payroll and you put it into your total payroll and into your total revenue. And that's about what it costs. It's about 33 to 35% of every dollar is used to cover the cost of staff and payroll. So when you add in your food cost and you add in your labor cost, and that's where most of your expenditures are going, it is 64%. So the total prime cost was my food, my labor, 76,000. We took in 119,000 in total revenue. So it was 64% just to cover these costs. And we're looking at year to date. We're looking at $1,509,000. And when we take the total of these two, the prime costs, when I take the totals, is 955,000. So again, from a year-to-date standpoint, it's 63%. So it's pretty consistent as far as the numbers go. Again, the percentages tell that story. Indirect expenses and other controllable expenses, music, marketing, utilities, general assistant. And that's one thing, the Uniform System of Accounts tells you where everything should be expensed to. It even gives you a chart of accounts. So if I were to look up and just pick one, let's say paper towels, okay, or parchment, yeah, paper towels. For my operation, a lot of people will try and put them into, or glassware. Paper towels are go into a direct operating expense. And when you do your financials, you just accumulate all of that information. I'm going to break it down a little bit further for you. This is the second half, again, controllable expenses that we were just talking about. So when we're looking at this, and the bottom line that we're looking at, this is the second half. I'm going to go back for a second. When we got all said and done, at the bottom of the income statement for the current period up here, the income before, and this is before income taxes, is 6.4%. Okay, 707,640 profit. For the period, or for the year-to-date totals, we're looking at the income before income taxes at 116,000 or 7.7%. So in other words, in this operation, for every dollar they took in $1.5 million in sales, when they get all said and done with $1.5 million, 7 cents out of every 7 point, we'll call it 8 cents out of every dollar was all that they made out of this. So do you start to see that it can be really tight when we get those numbers? So that's why understanding and controlling what's going on is so important, and why I'm spending a lot of time on this. The restaurateurs, food service people have got to understand what's going on in your operation. Again, this is just another example. This is last year, this year. Now, somebody would say, again, I'm looking at, let's say, I'm looking for a really good number here. Yeah, other controllable expenses. It went up from 343 last year to 398. And somebody goes, well, that's almost 60,000. But if I'm looking at the percentage, then it changed. So the percentages do make a difference for you to look at. All right. So again, I'm looking at the formula that how did we come up with these numbers? It's when we have the sales, and you got that from your point of sale system or a manual system. I don't care if you write down everything on a ledger sheet. You've got to know what your food sales are, your beverage sales are. So when I'm going to look at this year's numbers. So how did I come up with this 37.3%? Cost of food sold. I know from the work that we did, beginning inventory, that my total food that I used was 767,443. I divide the food into my total food sales, and that means I'm running a 37.3% food cost. That's a little bit higher than I would normally like to see, but it's okay. Then we have beverage, the same thing. Beverage, it costs, when we keep our numbers, and again, you're a good accounting system, you spent 96,000 this year, and your total beverage sales are 48.2. That means your beverage cost was at 20%. Again, if I own a business, I want a whole lot more beverage sales, because I make, instead of paying 37, in this case, 37.3 cents of every dollar to pay for food, I'm only paying 20 cents of every dollar for liquor, and I'm making a whole lot more money. That's why a lot of people want bars, or they want, they do want the, having the beverage bar in their restaurant. And the same thing with the labor management that breaks it down. So total labor. Now remember, again, total labor, when we get this number, is divided back into the total revenue. I'm sorry, total revenue sales right here, 2,541,000. Now, again, I will just quickly mention management. How did I get that number? I know what I spent on management, and I divide that into that 2.5 million, and it's giving me the percentage. Again, the prime cost in this particular example is I took in 2,541,206, and when I got done paying food, beverage, and labor, that cost me 1,689,901, which means that 66%, 66.5% of that $2 million went to pay just these expenses. So I hope that starts to drive home why understanding and controlling these numbers is so important in the reporting process. Again, a lot of the accounting systems that you see when you see a profit and loss statement, if you go and look on Google and you look at a profit and loss statement, it doesn't show prime cost, because the restaurant industry is very unique to this. In fact, I've had many discussions. I've had a couple of accountants that just refuse to do it. And I go, that's your choice. And I have some clients that don't want to change and they don't want to adapt to this. That's fine. But when you're trying to control what's going on in your restaurant and make money at your restaurant, and I keep saying restaurant, but it could be that you're running a food service operation for a nursing home or whatever it may be, a catering company. So just know it's kind of generic when I say restaurants. So just a real quick recap on the formula is, so the crucial step is figuring out what your food costs, that percentage. So you're taking the total food used divided into the total food sales. If anybody has their your smartphone, you might want to just grab a picture of this. And I think when we're all said and done, when you finish the eval, these PowerPoint slides will be going to you. So, so the food cost percentage, that tells me the whole story of what's going on. Now, I did a little bit of a breakdown just to give you again, so the food cost percentage can be computed for each food subcategory. In this instance, I took the example of the food cost percentage for the category of meats and seafood. So again, when my invoice comes in, when I purchase things, if you're smart and if you have a point of sale system or a computer system, you can keep track. When you're buying something, if you go to Costco, cost you less. One of the things I encourage some of the clients that I've worked with here in the islands is that, okay, so they're buying locally, they're using cost you less, or one of the other, whatever store you're using, is that process all your food items in just together and then pay for that, and then do, let's say, beverage items, and then other, paper towels and everything else you can do as another, just to make your life easier. But if anybody's getting from Sysco or one of the other food vendors that delivers directly to the operation, what's really neat is their invoices. If you look at them, they break down categories. They go meats and vegetables, and they just break it all down so you don't have to work so hard. But in this case, meat and seafood cost, and then we're looking at the total food sales, and then meat and seafood cost percentage. So what I'm using in this example is to show you how to break down a food cost percentage so you can see the costs are running in a specific area. Here's an example that we use, and it's you get the total. And by the way, if you want to take a picture of this too, because the next one is going to show you, I'm going to show you from the financial statements how we came up with this. So total food sales are $2,058,376. Your total cost of meat and seafood in this case was $343.63. So the simple formula is 343.63 divided into 2 million, your total sales. And that's for meats and seafood, that was 16.7% of my budget. So if you remember those numbers, here they are right here. Here's my total sales. So what we're doing is, I really encourage anybody that has an operation, can you break this down so you know where you're spending your money? In this case, this year, and you saw the 343,063 divided into the 2,058,376, and that is 16.7%. Okay, so that starts to break down. When I'm looking at this, that's is that a high percentage? What can I do to possibly shift things around? Is there something, can I do something with more fruits and vegetables, which in this case was just at 6.2%. And looking at the variance report, again, this is taking last year to this year and showing you the variance, what has changed in these particular items, okay? So any questions so far? I'm about to go over to the beverage area. Anything in the chat? I don't see anything in the chat. You guys are good. Okay. So beverage is the analysis, and key performance indicator too. It's almost identical to your food information, so I'm not going to spend a lot of time there. But managers should analyze the beverage expenses in the same manner that they do for the food expenses. And when you're looking at this, you want to analyze the beverage expense category and compute the beverage cost percentage, compare them to your planned target averages, and then compute the beverage inventory turnover rate. Now, there are a couple of things that come up with beverage. It is very easy if you have a bar or you're selling liquor, it's very easy to have somebody, especially bartenders that know how to do this, to rip you off. I had a bartender one time that I was going, it's something doesn't seem right, because you start to look at the numbers. And I had, let's say 50 clients in during a 2-hour period, and the sales were, equivalent to what I would expect with about 30. So I was like, yeah, what's going on? So anyway, what the bartender was doing was, and I had to bring in, by the way, someone called a spotter, that I hired somebody to come in and just watch what was going on. So the bartender would bring in their own bottle of liquor. I'll call it, just some bottle of vodka. Okay, so that they bought out on the street. And what they would do is, if somebody was paying cash for drinks, is they would pour the drink and using their vodka and yet they collect the money, but not put the money in and ring it up in the cash register. And they use, believe it or not, toothpicks to figure out how many, or they put the money in the register, but with the toothpicks at $5 a drink, at the end of, let's say, an hour's period, if they had 10 toothpicks sitting up there at $5 a drink, you start doing the math on how much money they're going to take out of the cash register because it doesn't show up. Many ways to rip off a company. So some assumptions that you have to realize when you're dealing with beverages, if you have a lot of rare and expensive wines and very high-end prices on your beverage, so your inventory rate is going to be relatively low. So how many times that we have to reorder and refill? And conversely, if those, a lot of times when you're selling a lot of beers and wines and wine by the glass, the turnover rate you can expect to be high. This is, again, just some information, and I don't think you're going to be experts at this at the end of this session, but be aware of it and keep asking those questions. Okay, so calculating the cost of goods sold for the beverage is almost the same. Beginning inventory, and I put during the month you ordered 8,000 in additional inventory and ended the month with $2,000 in inventory that's left. So the beginning inventory 3,000, purchased inventory 8,000, ending inventory 2,000, and I did the calculation down here. And again, cost of goods sold, beginning inventory plus purchases minus ending inventory equals cost of goods sold. So we started out with 3,000, we purchased 8,000, and at the end of the period, we had $2,000 in inventory left. So that means that this operation consumed and used $9,000 worth of liquor. Basically, it's just a matter of getting used to it. And I got to tell you, when you're doing a liquor inventory with all the bottles, if you have a big bar, it's tough because you're looking at, full bottles are no problem. Okay, I have 10 bottles of Jack Daniels, or I have this, this case of, so I know how many full bottles we have. Those are fun. It's, fine and easy, but you start getting to what we call in-process inventory and things that, that you're in process using. You look at a bottle of vodka, let's say, and we break it down into tenths. So I look at the bottle and it's half gone. So 5/10 of a bottle. And then I have to calculate how much that is worth. In today's world, they have these amazing computers that you can just, it knows, you say I'm putting on a bottle of Jack Daniels on this scale. And so you told the computer it has all the measurements, how much the glass weighs and how much when it's full or whatever, whatever's in there at a full price. And then it will actually calculate out, you put the bottle on and let's say it's half full and it will say, here's how much that you have. This is what this bottle is worth with what you have left in it. Really some neat things there. Okay. So labor is very similar, except I did point out, remember the labor cost of your labor total, and you can break it down in different ways by management and everything, but you're always going to end up with your cost of labor divided into your total sales, and that's how you're going to get your labor cost percentage. Labor usually runs about 38% for every dollar. If it's running much higher, now it can run much higher. Let's say if I have a full service restaurant, I would expect possibly to be paying 40 cents out of every dollar because of the fine dining atmosphere, more services. But if I had a fast food operation, I would expect possibly down to 28, 29%. Same with the food costs. So it's essential to realize that there's several ways to look at the labor costs. And I put in here, you have hourly only, hourly and management and all labor costs included in the payroll. It's really up to you how you want to break that down. I'm not going to do this one. So here's an analysis of the labor cost, and it's broken down by management, staff, employee, benefits, okay, and total labor cost. So in this case, this year, management, well, I'm just going to do why, again, percentages are so important. Last year, this year, if I'm looking at management, basically the percentage stays the same, but notice that if I'm looking just at dollars without the percentage, I had 128,000 and I'm at 142,000. If I'm just looking at dollars, I may be in a panic saying, holy mackerel, look how much this went up. But remember, this is a percentage to your total sales. So last year it was 5.6. This year it's 5.6. I tend to calm down. Staff, notice it went from 512,880 to 571,265 this year. But the percentage is close enough where I'm going to pretty well stay relaxed. Now, total payroll went from 740,000 to 825. By the way, I round off numbers when, especially in all the years of doing forecasts, you kind of round everything off. But the key for me as a manager that I'm looking at is 32.1% last year total labor cost, and this year is 32.5 with raises and everything. I think that's a pretty good, that's a good indicator to me that we're on target. But again, look at the difference in revenue. It all depends on what the sales were this year versus last year and how these percentages work themselves. So one of the labor tracking, I highly recommend anybody that's in food service. If you're a manager, if you're an owner, it doesn't matter. Again, this is what almost bankrupted me the first time because I wasn't watching. Payroll will just make things go crazy if you're not watching what's going on. It's really a very expensive lesson to learn. I apologize. I was trying to, my cursor is acting up again. So when I look at, labor costs for the cost of labor and my total sales, it gave me a percentage. So as I'm going through here, now what could have happened in week 4? It could have happened to us this week with all the crazy weather that we had. And so let's say I didn't open my operation for 2 days. That could explain what happened in week 4, why this dropped. Or that, all these other days, what do we have? Like 18,000 cruise ship people on the island when that, when we have 4 and 5 ships, we're pushing between 16 and 18,000 extra people on St. Thomas. So when I'm looking at that, let's say, and then I look, we had a really slow week where only like 2 ships a day and not a lot of people. That could help explain. So you need to be able to explain and look at what happened here. Okay, total sales was 24,000, but I only used 6,922. Well, how about 3 people called out sick and the manager and assistant manager were running like crazy, taking care of customers? That could explain some of that because the others are salary. I apologize for my computer just dinging away here. Oops, stop share. I hit stop share by mistake. It's coming right back, everybody. Okay, are we back on? We're back on. So I'm just showing you again that when we look at this entire profit and loss statement, this is what it's all about, everyone. That do I expect, would I expect everybody to be experts at this point? Absolutely not. Okay, and I apologize, my laser pen, there we go. It's just been crazy. So again, do I expect at the end of today that you would understand all these little areas of, we have food to food, beverage to beverage. Yeah, hopefully, kind of keep that in mind and start working with it. But understanding prime costs, you need, if in watching, the average in the industry is 60 to 65%. And if you're running at 70, 75%, well, start looking at these numbers. What's wrong? Why are we doing this? And it can go out of whack so fast. It's just amazing. So, and then the other thing is your bottom line. What is it really when you get down here? I had a client that was going for a loan for a restaurant. They wanted 250,000. And when they first came to me, they said, oh, look what I'm going to do. And they showed me their projection for the income statement for the future. And they were projecting a 45% increase or 45% profit before taxes. And, their industry norms, a lender is really going to be very smart. They're going to know that the average for a restaurant is net income before taxes is like 5 to 10 cents on the dollar. So when the client that I had, they insisted, they said, no, I'm going to the bank with this number because I feel really confident. Well, it turns out, unfortunately, that the bank kind of said, no, go and redo your numbers and come back with something that is legitimate. So these are things that are that you would understand where we are on these percentages. And every restaurant is different. If you're a full service restaurant, your numbers can vary. If you're a fast food restaurant, you would expect the percentages and the numbers to be lower, the cost to be lower. So there's no right or wrong answer. A lot of people ask me, what is the best food cost percentage? It just depends on what kind of restaurant you are or food service operation you are. If you're doing catering, and you do a lot of buffets and you do a lot of buffets for your clients, I would expect the food cost to be lower than if I was a full service restaurant doing table service. So there's so many variables. Just kind of ask the questions and it will hopefully do that. So I hope everybody that's here, I've got a tool here for you that will save you so much time and energy. I had a restaurant that was in Iowa that was ready to close because they just weren't controlling their, they didn't understand the financials. End of story. So I gave them a really simple tool, which I'm sharing with you right now, and you'll have this, and I recommend anybody in the food service industry use this. When we were looking at the prime cost and everything, that's so involved. You have to do the inventories, and you don't get the answers right away. So what we're looking at with this, it's a 6-column estimate, is entirely accurate. And the advantage is it's straightforward to compute, requiring about 10 minutes or less a day for you to put the numbers in. And I don't know I just don't know any restaurateur that cannot spare 10 minutes a day, even with the craziest days where you're exhausted. So it's looking at the sales history and the purchasing patterns, what you purchased. So it identifies the potential problems before the end of the month. What happens with this? And again, I've had so many restaurants that were ready to close. And the first thing I do is I give them a sheet like this. So it's a food cost estimator. And again, this is from, remember I was saying as an associate professor in food, beverage, and labor cost control. This is the textbook that they were using back when I was there, the Dobson and Hayes. And this is something that's in the book, and it works. I'm not a mathematician, but it's so accurate. It works so well. What's going to happen is you're recording your sales and your purchases on a daily basis for the whole month. What happens usually by between the 10th and the 15th of the month, you start to see on the month to date figure what your food cost is really kind of averaging. And it's such an easy tool to use. The advantage, and the real advantage here is you're not waiting. You know, the other reports are so important, the prime cost, the income statement. This tool, if you're just wondering, how am I controlling everything? This will tell you usually by mid-month, am I in trouble or am I not? So this one, so there's a couple of assumptions that I did put in here, that it's assuming that, let's say your menu, it didn't really vary. Your menu stayed about the same. You didn't add 62 items to your menu. So the assumption is it's pretty much the same thing that you've been doing. Okay, that's long and short of it. So I have an example here for you. Okay, and I'm just going to quickly but systematically go through this, and it's simple. You know, today on September 1st, we did 3,000 in sales. So sales, purchases, and the cost percentage. Your biggest calculation is figuring the percentages. So today, our sales were 3,000. It's the first of the month, so that means my month today is 3,000. Tomorrow, on the 2nd, my sales were $4,000. So yesterday's total of 3,000 plus 4,000 today means my month to date is 7,000. Everybody kind of get that? It's just basic. So, and then you have on the 3rd of September, you did 5,000 in sales. So yesterday's 7,000, and that was the total at the end of the day, plus the 5,000. Your month to date is now 12,000. And you just do that every day. So it's really simple for anybody that has a food service operation. You either go to your point of sale system and push the button and say, what were my sales? Now, remember, you're asking the question of food. If you can do beverage and you can also do labor, but those are different reports. We're looking at a food cost estimator because food cost is usually what's going to sink an operation. Food cost that's out of control. I had a client, they were running a 62% food cost. They had no controls in place. They didn't know what they were doing. And that's, again, the same client that they put this in place, they brought it down, and they're still in business today, and they're doing really well. And I talk to them and I say, have you started doing your detailed financials? And yeah, we're getting there. So that's fine. You got this part, but just to know what's going on in your operation. So that's how we figure out the sales, just on a daily basis, and you just keep adding it month to date. Purchases, again, when you're going through Cost You Less or any of the other stores, separate your items that you're purchasing. If you're not having a full food service delivery is usually much better, in my opinion, because of consistency. However, they get food service delivery, they will break your invoice down for you into food, into paper goods, and to liquor if they sell liquor to you. So if you're at, as they say, Cost You Less, just run the first, anything that's food, run it through and get a total, pay for it. And then the next one, you just run all of your, if you're buying liquor, you buy run that through. And then all your paper goods and everything else that you're running through, run that through separately. But what we're looking at, remember, this is your food cost estimator. Okay, so today I purchased $500 in food, same thing. Okay, so month to date, when we start out, it was $500. Then we go $500 plus 2,000. We purchased $2,000 worth of food. So month to date, we have purchased $2,500. So just real quickly, percentages, it's important to keep these percentages going. Today, my sales were $4,000. I spent $2,000 on food. That means my food cost today was 50% just for today. But when I look at my 2,500 and my 2 days worth of to date for the sales, the food cost is 36%. So you do this every single day. And what's really neat is usually, and I highlighted this, by the 10th, 11th, 12th, you're starting what miraculously, it works every time. You're starting to get that pattern of what your food cost percentage is actually running you for the month. It works. It is one of the best tools any restaurateur or food service person could use. And I am a fan of all the financial statements. You've got to know them. But as far as an immediate tool, this is just dynamic because and I'll give you an example. I had my food service at one point, my food cost percentage jumped like from 32, I averaged about 32%. And all of a sudden, my food cost percentage jumped to almost 40%. Now, that's before we had this. And I'm going, holy mackerel, how did we get? And so we took inventory again. We checked all the numbers. Everything was right. I talked to the chefs. Did you have a lot of spoilage? Did we have food that we had to throw out? No. And then looking at I looked and compared sales from a previous sales period. Our sales looked accurate. So I didn't think anything was wrong there. So process of elimination, I'm going, okay, somewhere in this operation, it's since we're not having spoilage, we're not having the sales off, somebody's either ripping us off. And my first thought was, yeah, somebody's ripping us off. Well, long story short, I got suspicious and saying, how could this happen? So I went in one of the nights on our bigger night, I went to my competitor next door and said, by the way, I'm going to be parking my car out in your parking lot. I'm just watching what's happening at my operation. And they said, oh, go for it. So we all work together and get along well. So sure enough, the staff, the cleaning staff, brought out all the garbage, threw it in the dumpster. Okay, that's normal. And I sat there, and about 2 a.m., a car pulls up, and it's part of that my cleaning staff and janitorial staff got out of the car, jumped into the dumpster, and pulled out a couple of garbage bags. Well, what they were doing was stealing prime ribs from the freezer, and of course they're in cryovac. They're really sealed well. They're frozen, and so what they were doing is throwing them in the dumpster as garbage, but then they take all that meat and go out and sell it. So that's why my food cost jumped from the 33% almost up to 40%, because that was getting ripped off. This is why you need to watch what's going on. You can't afford not to have all of these and these standards in place. This is a really good tool. I encourage everybody to use this. If you don't have the other areas in place, do this one first. And you can start it in the middle of the month, that's fine. But just get it prepared. It's not hard to set this up. It's easy. Talk to me. We can set this up, and then you can keep it manually. You don't have to have it, just handwrite the information in. Okay. So just to give you an idea of the uniform system of accounts, I wanted to show you the actual chapters that they have. Today, we worked on the statement of income, or the P&L. By the way, income statement and the profit and loss are exactly the same reports. So sometimes you'll hear someone go, the profit and loss statement. Sometimes you'll hear someone go, the income statement. It's the same thing. I have no idea why they have two different names. I'm not going to talk to the accountants about changing it. So then they have the next round. If you're all interested, I'll be looking at the income statement, the detail behind how did we come up with all those numbers. We touched on that a little bit today. And then the balance sheet and statement of cash flows. So this publication tells you how to do each one of those. By the way, this book you can get on Amazon. It is about $70, $75, but it's well worth having for yourself. Then examples of financial statements based on the uniform system of accounts. They talk about the balance sheet and the income statement. And then the basic accounting, I love this, the happy audit trails to you, the Restaurant Association accounting process, frequency of financial statements, how often you should do them. So this really breaks down for the entire industry what you should be looking for and to be doing with your financial restaurant control systems. And I love this one. This section is really useful because what it has is we have cash control. How are you going to do your cash control in your operation? Food cost control, a lot of what we just did, labor cost control, weekly prime cost reporting. These are all part of that publication and also has tax information. And the one part of this publication that I really love is the sample chart of accounts. Anybody that's done accounting, it's like, okay, what is my revenue, labor? What are my chart of accounts? What numbers are the accountants going to use? This actually gives it to you. And the other thing is when we're looking at what we were talking about, it has a complete breakdown for us or for you. If I were looking at beverage spoons, okay, I just opened it up, and beverage spoons or beverage stirrers, that's a direct operating cost, bar utensils, supplies. Broiler inspection, repairs and maintenance. It tells everything that you would ever have, in my opinion, almost everything, as far as where would I put that expense? What am I going to do with it? Okay, so the publication is really good. If you can, and again, this is just a quick sample of, this is a preliminary format, uniform system of accounts for restaurants, summary, vision, income statement, for a full service restaurant. Again, this was just for review and discussion on what they're projecting for the current period, year to date, and this is what it will look like in the future. Okay, with that, does anybody have any questions, any thoughts? Anybody scared of this? Don't feel, feel free to just ask questions about this. Do I expect everybody to be experts? Oh yeah, that would be great. No, we don't. The thing is just the introduction for you so you can look and see what can I do for my operation. The restaurant industry is notorious for failure. This is how you start turning around. Start with yourselves and make sure you know what's going on financially. You could have the best food in the world. You can have the best customer service. But if you're not going to be making money, why are you doing it? I had one of my mentors who was quite famous restaurateur, Mike Hurst. He would turn to us and say, it's great that you're putting out this wonderful product. It's wonderful that you're giving this great service. But if you're not watching your financials and you're not watching and controlling what's happening within your operation, chances are you're going to go out of business. So what good did it do you to create this amazing menu and this fabulous customer service if you're going to have to shut your doors because you're not watching what happens? There is so little room for error in our industry. It's really tough. Okay. So do we have any questions? I see nothing in the chat.
No questions.
No question. I guess I'm that good. No. So really, everyone, this is an introduction, and I really thank you. I don't have a lot more with this, but I really encourage you to reach out to us, call, you can talk to, they can find me just about anywhere, or we have the most incredible staff of advisors here, not only in St. Thomas and very experienced in our marketing team and our administrative staff, but we also have an advisor out in St. John, and we have some great advisors over on St. Croix. So we are territory wide, but feel free to please reach out if you want to become a client. I encourage you, by the way, because everything we do with the Small Business Development Center, we don't charge our clients. We get paid through the SBA pays us, and our host, which is the University of the Virgin Islands. They pay our, the rent, the salaries and everything. So you get all of that benefit of learning how to put these and work with increasing and managing and hopefully building your business. And it doesn't cost you a thing. So I encourage you, please, 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 stop in and see one of us, call us, and we will see what we can, we can most likely get you on board there. So anybody have any, I get it. I threw a lot at you today. If you don't have questions, if you get one of those burning questions at 2 a.m., please wait till 7 a.m. to call me. But we'll just give a call and I'll get your questions answered. If you want to step by step on how you put something together, that's what we're here to do. So I encourage you at that point, do become a client. It doesn't, as I said, it doesn't cost you anything. And what's even better is everything that we do is confidential. We do not talk to anybody about that, about what we're doing. So, and we take that very, very seriously. Okay, any other questions?
We have callers saying, thank you. You have provided a lot of great information. We have Shauna saying, hi, John, I don't have any questions at this time. I am thankful for the information. And we just have an overall thank you. So let me take this moment to say the VI SBDC has so much more in store for you as VI small businesses. You can visit our website at www.visbdc.org. Download the VI SBDC app on your mobile device from the appropriate app store. Like and follow us on Facebook, Instagram, Twitter, Google Business, and you can subscribe to the VI SBDC YouTube channel for new uploads of our on-demand webinars. Let me mention a few of our upcoming trainings. On February 13th, we have VBOC. They're presenting on the economics of small business startup. In person, on the 22nd, we have electronic payment processes for USVI businesses. In person, on St. Croix, on the 20th, we have New Year, New Business, SBA resources every small business should know. On the 26th, this is also in person. On St. Croix, we have securing this SBA loan for your business, how to get approved. On the 29th, we have a webinar and it's on tax basics for small businesses. And in person on March 5th, we have electronic payment processes for St. Croix small businesses. So I don't see any more questions, John.
I have one for Charmaine, and I don't know who that was directed to, but it's if it's the business that we're in here. I'm with the state director for the Small Business Development Centers. So I wasn't sure. I just wanted to let you know where we were from. Okay. Sorry about that.
No problem at all. So just a friendly reminder to check your email. We're going to send you a post survey and it's going to include a copy of the presentation. So I don't see any more comments at this time. So on behalf of the entire VI SBDC director compliments of our network, we would like to say thank you and enjoy the rest of your day.
Thanks, everybody. It's been a pleasure.